Good evening, this is Giuseppe Basile. I'm the analyst and trader. You can find at the blog FibonacciStalking.com. I also post regularly on Twitter using the @FibStalker nickname. Good evening, today is Thursday, January the 10th, 2013, and it's 10:30 p.m. Italian time. And this is my video for the midweek update for today. In this video I usually review the dollar index, the euro-dollar FX currency futures, and the ES SP500 E-mini futures. So let's start from the dollar index. If you remember the past videos, I identified the resistance levels we have in the dollar index. These resistance levels are very important because the dollar index is actually an inverted version of the euro dollar, so knowing where the resistance is can help us understanding where support for the euro is. So we have this long-term resistance at 84 in the 84 area, and this has actually targets below, and we also have identified in the last few months the resistance level in the 8160 area that I called correctly if you review my videos, and that's just an halfway back from the highs in July, which corresponds to lows in the euros. Now in the last few weeks we were on our way down into new lows for the dollar, but actually we had this move higher here above 80, 90, 80, 95, and that skewed the picture here, because although price went down into 79, this violation here on the upside with price above 81, 80, 95 actually brought short covering into the picture here, because the sequence of measure move lower failed with price going above 81 here. So as you will remember from my midweek update that I've sent to you on December 20th, I told you that we could see starting a move higher. That's exactly what happened, and as you can see here, the low was exactly on the 20 when I said this. It was no gambling here, or the hint was the fact that the 79.30 area was hit, of target was hit, and price went below it, and we had this violation on the upside on the December the 8th year above 81. So we had to get some kind of reaction. That's what happened. Actually I was expecting something less significant here, but we actually got a move again above 81, and short start coming in again around this 81 area, as we can see. Now it's important to notice that the actual violation came when the sequence of measured move somehow was violated. So we had this first measure move, traditional measure move with a support in 79.50, with the first target in 80.30, which was it, and second target which was it in 80.60, 80.70 area. So we were expecting to see this move keep moving higher, this move in the dollar index keep moving higher. We had to keep trading in extensions here. So next extension had a support in the 80.50 area, but as we can see, price came below the 80.40 area here, and this decreed the end of this move higher, and the move lower was restored. And as soon as this morning price came back to previous highs at the 80 area, we had this huge move lower, and the all the way halfway back was not able to contain price. So I can state here that this move, according to rules of program trading and algorithm trading, has ended, and we are going to see the dollar resume its move lower, and we should see new lows very soon below 78.80. So this means that the euro and the S&P 500 can keep moving higher. We have no divergence between the euro and the S&P 500 as we thought we could get in the past. So they're moving opposite the dollar. So let's see the ES currency futures. So we know we have this level of support here, 126.80, which is identified based on the traces we have on the weekly chart. You can review the weekly review I post every weekend on Sunday to my newsletter subscribers, and you'll see where we got this 126.80. Now this 126.80 support level in mid of November, the trade in mid of November has a target in 134.40. So I'm targeting 134.35 or 30 here. And in the last month, and actually in the last midweek update on the 2nd of January, I indicated two levels. The first level was violated, and as we can see, this was the next measured move, traditional measured move here, but price went below 30.55. So I told you to watch this level, because below this level then we could only see another level of support, which was 130 area before the 126.80 would have been retested. But last Friday we found support in this area with a small front run, just 5 pips here, and this decreed the start of this move higher, which was confirmed today. Now today we had this huge move higher that confirmed targets above 134.40, because price went above the 132 level here, and this was the confirmation. So if we get a retracement, then now we could get price maximum retracing into the 131.80 area, but it's also possible that price will retrace for a continuation before a continuation into the 132.10. So that's definitely the levels we have to watch. Moving into the ES, nothing changed here. As we know, in the last few months we had this level of support here, and price actually the bulls were able to hold levels here. I need to trace this in the correct way. So we know that bulls were defending this 1352 level here, and this level has targets above. The target is of this trace is above, is in the 1513 areas. I'm going to show you in a minute here. I just need to change the scale. So here is the target 1513 of this setup here, and this setup is a valid setup because bulls were able to defend this level. Price never came below 1326 here. So within this move we had a smaller move on the daily chart, as we can see here, and that's the move in the support in the 1390 level, and this is going to bring prices into the 1473 level, and this is the level we are watching at the moment. in our trading plan as well. And in this case we are seeing a scenario 1 being played, and we could see price moving into 1473 before we get a larger retracement. And this retracement could bring price into 1427 level. Now, seeing the strength in the euro, which matches weakness in the dollar, we'd actually see price keep moving higher here, so even above 1473. But if we get a retracement, this is going to come into the 1427. I just want to remind you, and that's it for the SP500. I just want to remind you that I'm going to record another video here for the euro dollar cross, the FX future currency futures here, because I want to show you a potential plan for the coming weeks. It's a little bit complex, but price behaved like that in the past, so there's no reason why, applying the same trading rules from program trading and algorithmic trading, we could not get such moves. So I invite you to watch the other video, the video on the long-term trading plan for the euro, because I'm going to reference that trading plan in the near future on my daily reviews, as well in the weekly reviews as well. Thank you very much for your attention. If you want to receive this video, as soon as I record it, just subscribe my newsletter. You can go to fibonaccistalking.com, and on the left side you'll find the icon to subscribe to my newsletter. Thank you very much for your attention, and have a great evening. Bye bye.